The dollar stages a rebound, and this week the Fed's preferred measurement of inflation is due out. Guys, Ken Chigbo back with another E8 Markets fundamental update. Let's jump straight into this. So the US dollar managed to stage a rebound after getting hit hard to the downside for 2 consecutive weeks. As you can see here, we went over this downside, and I did say to you guys, this is likely to just be near-term dollar downside. And if we quickly refresh our memory, the reason for these bearish candlesticks was a couple of reasons. One, we had a softening of tone from Jerome Powell, indicating that, they've made substantial progress on bringing down inflation, which means we're getting closer towards rate cuts. And 2, we saw lower inflation be reported out of the United States, CPI cooling. So this forcing the dollar to the downside. And one of the key things technically here, a couple of things, we broke that psychological 105 mark. Look, we had a nice little breakout and retest of that 105 area, and that invited a fresh wave of downside pressure. There would have been people that would have been a long dollar across the board, and there would have been a number of stops at 105, and it's a big technical breakout to the downside, okay? And ultimately, the dollar managed to stage a rebound at this big psychological zone, another big round number at 104.00. Now, when we look at the data last week for the dollar, we had a bounce because markets are just coming to the realization, look, we were trading a narrative that the economy is getting worse. We're seeing a worsening in the economy. Obviously, inflation's coming down as well, and it's just a double whammy for the dollar. But really, look at last week. Retail sales data's beating expectations. We had the previous numbers being revised higher. Building permits higher, industrial production stronger as well. The unemployment claims ticking up a little bit, which isn't that great. And then the Philly Fed manufacturing, a bullish number there at 13.9. So the economy's not worsening as much as the markets were anticipating. Okay, so we had a couple of reasons for the dollar bouncing. Also, we had the ECB rate decision last week where remember the dollar, Dixie, is weighed up over 50% weighting of the euro. So the influence of the euro as well. And where we had the ECB rate decision, they left the door open to a potential September cut as well. So that forced euro a little bit to the downside and obviously helped dollar. So this week, we're going to focus on, for the dollar, okay, PMIs, manufacturing and services PMIs, which is still expecting decent numbers there, generally speaking. We're expecting a decent reading on the advanced GDP number due out there. What else have we got? This is the highlight. The Fed's preferred measure of inflation, which is expected to be higher at 0.2%. So if that comes out higher, of course, that's going to help the dollar bulls. We're going to keep an eye on all these data points, okay? Even the orange data, existing home sales, manufacturing index, all of these. So let's see if we get a continued bounce back or reconfirmation that the economy is not moving that bad, and we could see the dollar very well breaking out and resuming that upside pressure back to this psychological 105 mark. Focus will also be on euro this week after closing in the red versus the dollar. As you can see, after 1, 2, 3 consecutive runs, weeks to the upside, and now coming under some pressure, and you can see that pressure really coming into play there on Thursday after the ECB rate decision watch, which I noted essentially, markets were expecting more of a pushback from, from the ECB in terms of rate cuts because they remain divided. Inflation's still sticky in the Eurozone, but they've left the door open to the possibility of a rate cut in September. So that is pretty much dovish there, and obviously weighing on the euro. Now, when we look at euro here, obviously we'd be moving within this descending channel structure. We could view it as a big bullish flag. And logically, our next major area of support is seen at around 108. So we could, with that dollar upside, if that dollar continues on solid data, this is going to head to the south. Now, obviously, we have fundamentals as well from the Eurozone in the form of manufacturing PMIs, which have been softening when you look at the last readings there. And the manufacturing PMI for France, services also dropping down. Germany as well wasn't good at all. Generally, we've seen a bit of a softening. So we could be open up for some further downside for euro if these PMIs do disappoint across the board. And obviously, it could very well see us heading towards, if we breach this zone here around 108.80, as I say, logically, it would come for a retest of this sort of 108 area, okay, where we have that demand zone, but also a retest of this channel, which we broke out of to the upside. So focus on euro this week as well. Focus also on GBP this week after losing some momentum in the latest week versus the dollar. If you look here, we actually closed in negative after 3 weeks, particularly the last 2 weeks were extremely bullish to the upside because data had been improving from the UK. We had solid GDP data. Inflation still proved to be sticky. So GDP had every right to take advantage of that dollar weakness. We ran through 130, but running into heavy supply at that psychological sort of into 130.50 area. You can see there left you know, we're naturally heading into this zone. There's a lot of supply there, a lot of resistance. Now, this week, we're going to keep an eye on manufacturing and services PMIs, also due out from the UK, which are expected to be generally decent numbers. Of course, if they disappoint, we're going to see the pound being heavily hit. Obviously, as a base case, we're just viewing GBP dollar here. There's a number of opportunities across the board outside of just GBP dollar. We got GBP CAD, we got sterling, Swiss franc. There's a number of opportunities outside of this, but we're just, as I say, just as a base case here. And you can see the way we topped out here on the daily, forming a bit of a evening star there on Wednesday, validated by that closure below there on Thursday. And also look on the 4-hour, nice evening star, validated by that closure below on Wednesday, and just resuming to the downside. And as I say, with this, when you look here, we do have decent demand. We're going to keep an eye on this weekly support around that psychological 128.50 area. Okay, that's naturally the next major area of demand zone. Obviously, everything is in the hands of data this week. Is very heavy data, as I say, with the dollar, and then we'll focus on these GBP PMIs as well. And very lastly, expect some volatility from the Canadian dollar, because we do have the Bank of Canada rate decision where they're expected, large expectation for them to cut rates by 25 basis points. As you can see here, due on Wednesday, rates expected to come down to 4.5% from 4.75%. And the reason being for that is inflation has started to cool. If we look here at Canada, let's bring it up. Let me refresh this. We bring up Canadian inflation. Just look at those last readings. CAD, CPI. Okay, you will see inflation is coming down. Look, on a month-to-month into contraction territory, or deflation territory, minus 0.1%. The year-on-year is also lower as well. So cooling in inflation setting us up for some potential downside for the Canadian dollar if we get that rate cut, and they leave the door open to more cuts. Just going to show you dollar CAD here. What's interesting, I spoke about this a little while, several weeks ago, and with dollar CAD, we're caught within this range where for the last 2 years, okay, and ultimately, we've been capped to the upside at that psychological 138. We've been capped to the downside at 132, moving within a 600 pip range. Then moving within a potential bullish pennant, right? Here's all of our pole. Here's the range forming that triangular structure, the pennant. Then on a weekly, interestingly as well, within this pennant, we've got a pennant. And within a pennant, we've had a flag. We're breaking out of that to the upside. Now, what really appetizes me if we get a breakout and retest of the big area of supply at 138.00. Okay, now when you look left, this really opens up the door for a big run in towards 146. Look left there, guys. We've seen it time and time again. So if we do get that cut from the Bank of Canada and they leave the door open to more cuts, this is certainly going to have room to just really fly towards those levels we last saw in end of March 2020 and also there in end of January 2016. All right, guys. So plenty of volatility due out this week. Have an amazing and blessed week, and I'll catch you on the next video.